Good afternoon, this is Mark Espy with MarketTamer.com. I'm also known as the Robinhood Trader, and we find ourselves on Friday afternoon, the 18th of June, and we're taking a look at the Dow Jones Industrial Average. Please remember that everything we speak about today is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Interesting week. We had a pretty aggressive push up earlier in the week, and then it flattened. We've had three very narrow range trading days last three. Wednesday we put in a somewhat of a high wave doji, then we put in a hanging man, and then today a shooting star. That all indicates that we're rejecting higher price levels, and the likelihood is that the recent uptrend here is beginning to fail and it may begin to retrace. As I had mentioned in prior analysis, actually for the last several weeks, I feel that we are in this trading range. It's about a 500-point trading range, about 10,450 to the upside, and to the downside, 9,700. So yeah, it's a bit more than 500, but I do believe it's failing at this juncture. It did make a rally above the 200 simple moving average, which was significant. It did fail on a retest 2 times back here, and then it was successful on breaking back through. It will be interesting to note if it in fact does retrace, if it goes back to retest from the top side, the 200 simple moving average, or whether it breaks back down and continues down and trades in this range. On the upside, we have resistance immediately at about 10,700, which is from the swing high back in January, and it also coincides with this swing high here in about mid-May. Then we go up to about 10,900. There's a shelf right here, as well as a swing high that was put in May as well, and then the top we have here is 11,258. On the downside, we do have pretty stout support at about 9,700 to about 9,800, in that neighborhood. We had a swing low here that was put in June. We had another one that was put in here on the 25th of May, and then back here on actually it was the February 5th low. So all of although this one doesn't really come all the way down to this area, it's close enough. So this area, essentially between about 97 and 9,800, should provide some pretty decent support. Below there, should it break below there, we have support at 9,750, 9,500, about 9,100, 8,800, 8,000, and then of course 6,500, which was the March low, or close to the March low of 2009. We have, it looks like the stochastics wants to roll over here a bit. It is in the overbought area. And hard to say what the MACD wants to do right now. If it begins to flatten and round and turn over a little bit, then we'll have a bearish divergence, because if you come from this peak, let me draw this in for you so you can see down here, if this begins to roll over, and if the histogram begins to retrace back toward the zero line, that will be an indication that we have lost momentum to the upside, and that will confirm the fact that we will probably retrace from this. Actually, this is a bull flag. It's not a classic. It's not what I would like to see if I were playing this to the upside. I would rather see more of a flattening, narrow range trading, maybe even trading back just a little bit bearish. So my best feel is that we're going to continue to trade in this range and come back down just briefly. I mentioned, I would like to mention this once again, I felt that the volatility was going to begin to come out of the market, which it has to a degree. I had mentioned several times that I felt that we would retrace back to the mean on the VIX, which is around 24 and 25, and today it just closed barely below 24. So I do feel that we're going to have a little bit more sanity in the market and begin to trade with a little bit more certainty rather than the headline risk that appears to be what the markets are reacting to. With that, we're going to go over and take a look at the SPX.